Good evening, friends. Uh, uh, this is Mihir Moge, your host for today. On behalf of NSC, I would like to welcome all of you for a webinar on ETF and Index Funds Simplified for retail investors. And the speaker for today is CA Rachana Ranade. CA Rachana Ranade doesn't need any introduction. She's a very popular YouTuber. But there are many things which you all must be aware about. She is a very popular YouTuber. She has done CA. She's a CA by profession. She has a lot of experience in teaching also. But there are many things which I'm sure a lot of people must not be aware. She is also a Sangeet Vishara. So she has sung songs. She has sung songs on for one of the shows on for A.R. Rahman show. So I would like to welcome CA Rachana Ranade for our program. So over to you, Rachana ma'am.
Thanks a lot, Meerji, for that introduction. And wow, when you said that she had sung, I just recollected that amazing moment when I had shared the stage with the music maestro. And I'm a crazy fan. That was a fun moment for me. And that has been a journey since then, from 2009, being a CA plus wanting to be a singer, then choosing the path. So now pursuing a career which is neither a hardcore CA career, not into auditing taxation, neither into singing, but into something which I had dreamt to be since I was a child. Always wanted to be a teacher. My mom was a teacher. My both granddads were teachers. Maybe that's why I tell many people that maybe it runs in my blood. But I chose that. Now my students unfortunately have no choice. Whenever I feel like singing, I do sing. And as I mentioned, they have no choice but to listen to me. So I take advantage of that. Anyway, so today we all are here for this session, which is going to focus more on ETFs and index funds, right? And I'm very happy. It's a great moment for me as well, because this is the first time I'm associating with National Stock Exchange, and I'm glad that me as an individual and NSC as a very big renowned organization, we share the same purpose, right? That we believe that the investors, current or potential, they should be very well educated, they should be very well informed, and whatever decisions they are taking, that should be these decisions should not be just based on someone else's thought process. किसी ने कुछ कहा तो बोल दिया, किसी ने कुछ बताया ये ले लो वो ले लिया. That should not be the situation. So that's the reason why I think like-minded teams always come together for a greater cause. That's why we are here today. So without a lot of further ado, I think we should just jump into our today's discussion, which is about ETFs and index funds, right? So if I were to tell you about a very basic thing, that the moment I talk about ETFs, exchange traded funds, or if I talk about index funds, I'm sure everyone can correlate with one word which goes very close to both these terminologies, be it ETFs or be it index funds. One term that goes very close to that, it's a mutual fund, right? Now, there might be absolute newbies in today's session, quite possible. So I would quickly want to tell you what a mutual fund is, right? So mutual fund is basically, I always compare this, that in mutual fund is something like you get a basket of investment and you get an exposure to anything and everything which is present in that basket. So I always say this, assume that if we were to prepare a bhel, okay, and there is churmura, there is farsan, peanuts and all that, onion, tomato, everything. We are putting multiple ingredients in one bowl. We're mixing them well. And to anyone who wants to have it, I'm serving one spoon now. That one spoon is going to have what? One spoon is not going to have only churmura. It's not going to have only peanuts, not only onion, not only tomatoes, but it's going to have a mix of everything, right? So can I say that one spoon of bhel is going to be a representative of anything and everything that is present in this bowl, in this basket? Exactly. Same analogy works for a mutual fund, right? So assume I'm talking about a mutual fund, which is a large cap mutual fund. So all these large caps, so I'm sure everyone has heard about Nifty as an index. And if it is, let us say, a mutual fund which is focusing on all those large caps which are somewhere or the other related to the index based companies. So let us say all these, one basic disclaimer. Whatever names I'm taking in this entire seminar, these are only and only for example purposes. Okay, any names in the seminar, 100% for example, not a buy recommendation. Okay, so going back to our example, assume I'm talking about blue chip stocks. So let's say I'm talking about L&T, HDFC, Axis Bank, Infosys, TCS, Tata Motors, everything. All these shares. See, if I go to buy one by one, it will take thousands and thousands of rupees. But if I were to, take all these in a bowl, mix them, and just give one small slice of that, that's called as a 1 unit of mutual fund. Okay, I hope you have understood what is 1 unit of mutual fund. What is the biggest advantage? Biggest advantage, as I mentioned, that if you were to buy one L&T, one Infosys, one whatever Tata, all of these stocks individually, all these blue chip, all these companies which form a part of Nifty, if you were to buy them individually, the amount will go into thousands and thousands of rupees. But if you were to invest in all these companies through a mutual fund, what is the biggest advantage? You can invest with as low as even 500 rupees. Some mutual funds can give you this exposure with even 100 rupees. So those who are giving this excuse that I don't invest in mutual funds because I don't have enough money, so your excuse is completely gone this very second. Why? Because as I mentioned, with as low a ticket size of be it 100 or 500, you can easily invest in mutual funds, right? Now, if I were to talk about mutual funds, two types of mutual funds, right? One is known as an active mutual fund, one is known as a passive mutual fund. What is an active mutual fund? Wherein the fund manager who takes the decision which stock to buy, when to enter, when to exit, in what proportion, all that is known as actively managed mutual fund. Why? Because the fund manager takes each and every decision for the fund. Okay. Whereas if I'm talking about a passive fund, what is a passive fund? It's a fund where, the mutual fund manager need not be actively involved in any decisions. What does the mutual fund manager do? He just copy pastes, or he just follows, I can say, follows some index is what I can say. I'm giving you an example of index fund. Okay. Index fund is a classic example of passive fund. It's going to follow something. So if in Nifty as an index, if the weightage for, let us say, financial services sector plus IT sector put together in Nifty is more than 50%, and if I'm talking about a passive fund which is following Nifty as an index, then the fund manager who is managing this passive fund has no choice but to have exactly same weightage, whatever is there for the financial services sector, whatever is there for the IT sector, exactly he or she will have to match it. Now, what about the stocks within that? Let us say in Nifty, Reliance has 10% weightage, HDFC Bank, TCS, all to put together, whatever, another 8 to 10%. Same percentage, same weightage has to be there for this index fund also. Okay, so I hope you have understood this. Whenever you are in school, okay, there are two types of kids, right? In examinations, one person is that bright kid who's going to study, come well prepared, is going to take decisions on his own, which question to solve, which not to solve, what is the correct answer, what is that? Actively managed. Okay. And the second type of kid is going to look here and there. What is he writing? What is he copying? What is that? Copying someone, copying something is what? It's a passive investing. Okay. So here the fund manager is not going to take any decisions on his own. Whatever decision has been taken by anything, the underlying is not the correct word, by whatever it is going to follow, same thing, copy paste is going to happen. So again, let me repeat, active fund, passive fund. Why am I talking about all these things? Classic example of a passive fund is index fund. Okay. And what is the index fund going to copy? Index fund is going to copy the index. Simple. One more time, index fund is going to copy the index. Now, which index? I'm sure everyone knows one of the most popular index is Nifty. Okay, everyone knows that Nifty has 50 companies. And so what is a index fund, which is a Nifty index fund? What is it going to do? It's going to copy the Nifty. One very interesting data point I just found out when I was researching for this topic, that only 4 out of 29 active large cap funds, I'm repeating, out of 29, only 4 active large cap funds have beaten Nifty 50 index over the last 5 years. So if I were to talk about a country like India versus a country like USA, in USA, passive funds are way too popular. Index funds, way too popular as compared to actively managed funds. But in India, even today, the craze for active funds is a shade higher. But I think now with the last 5 years data that I'm pulling in front of you right now, I think this may change in the coming years, that people might start preferring more and more of index fund, more and more of passive funds, is what I'm telling you. That can, that can happen in the coming few years, is what I believe, right? So what are we going to do in this session? I believe that in this session, we're going to understand two important channels, I can say, of passive investing. So I hope you all have understood active investing, passive investing. Two main channels to invest in passive investing. One can be through index funds and the other can be through ETFs. Okay. So now we'll quickly go and understand one by one what is an index fund and what is an ETF. Okay. So first let's start with an index fund. By now, I'm sure everyone has understood what is an index fund. So it is going to copy an index. Acha, now which index? Could it be only NSE? No, why only NSE? Could there be an index fund? Could it be only Nifty 50 as an index fund to copy? No. Could an index fund be a fund which is copying another index? Could it be like Nifty 100, Nifty 200? Yes, why not? Could it be Bank Nifty, Nifty IT index? It could be any index. A mutual fund which is copying that, it's going to be an index fund. And that's going to be a classic example of what? Passive investing. Simple till here. Okay. So basically, if I were to judge the performance of a mutual fund manager who is managing an index fund, how do I manage the performance of that mutual fund manager? I just try to see that how closely that mutual fund manager is following the index. Okay. So just as an example, if Nifty is up by 3%, okay, is the index fund which is tracking Nifty, is that also up by 3%? If Nifty is down by 2.5%, is this fund which is tracking Nifty, that is also down by 2.5%? More and more it copies the index, I think better is the fund managed. And what do we call that? We call that as a tracking. Okay. So I'm sure you might have heard this term of tracking error. Now, what is a tracking error? Tracking error means if the fund manager is not able to track the index very closely. Nifty is up by 3% or his fund is up by just 2.5%. Okay, that should not happen. A lot of tracking error. Okay, so last time I'm repeating, how do you decide whether a fund manager is good for an index fund or not? Very important. It should be a good mutual fund manager would be a one wherein the tracking error, he or she can keep it at a very low possible level. Number one. Number two, now if you ask me which index fund is good, please tell me on that. So number one, an index fund which has a low tracking error will be good on one side, and on the other side, if the expense ratio will be like the costing of a fund. Expense ratio should also be very less. Lower the expense ratio, lower the tracking error. I think that is a classic sign of what are the qualities, I can say, of a good index fund. Okay, I think basic points are clear. Now you may ask me that, Rachana, if you were to invest in index funds, what are the advantages, right? So one of the very basic advantages, like I mentioned right now, if you were to invest in an active fund, expense ratio is going to be higher. But if you're investing in an index fund, then expense ratio is going to be pretty much low. In fact, for index fund, expense ratio is lowest amongst equity funds. Okay, so that is one big advantage. I can also say that index funds can be comparatively less risky. I'm not saying zero risk. No, I can say comparatively they can be less risky. Why? Are they following an index fund? So mutual fund manager taking wrong decisions, mutual fund manager doing wrong entry, wrong exit doesn't happen. What is the mutual fund manager's main job? Follow the index. Khatam. So taking wrong decision, this risk itself is gone. Okay. Very important advantage of index fund, investing in an index fund, is that you get an exposure, a very wide exposure. Like I told you in the beginning of the session, that if you were to invest in all these 50 companies one by one, it will take thousands of rupees. But with the help of an index fund, hardly 100 rupees, 500 rupees, you can easily invest, right? And finally, I can say they're very easy to track as well. No specific difficulties here. So these were the basic advantages, is what I can say. What could be the disadvantage? I think one or two basic disadvantages. Number one, you might have heard about, all these experts talk about a term called as alpha. Okay, all the experts say our fund has generated an alpha of whatever percentage, 5%, 6%, whatever alpha we have generated. So those who are the newbies, they're like, what is alpha? Okay, in simple words, additional return as compared to the benchmark. Benchmark in our example. So let me give you a simple example. If Nifty is generating a return of 10%, pay attention. If Nifty is generating a return of 10%, and if a mutual fund is generating a return of 12%, right? Has the fund manager taken extra efforts to generate returns more than the benchmark, than the index? Yes. This additional 2%, which the fund has earned over and above the benchmark, can be called as alpha. Okay. Now, if I'm talking about investing in an index fund, there'll be no alpha. Why? Whatever index is generating, same returns will be generated by the index fund. So no concept of alpha as such comes when you're investing in a index fund, right? Number two, so if there is a stock in the index and which the fund manager believes that no, this is not a good stock to invest. I believe that fundamentally, whatever I can see based on estimated cash flows, based on estimated profitability, estimated revenues, whatever. If the fund manager feels that I should not be investing in this XYZ stock, which is there in Nifty, can the fund manager take the decision? Answer is again, no. Fund manager has to get exposed to all those stocks which are there in that specific index, which the index fund is tracking. So his choice or her choice of investing is gone. I think that is, and can I say because of that, even the flexibility to invest is also gone? And I believe answer is again yes. So these were one or two disadvantages as well for investing in an index fund. But I feel that the advantages are way too higher as compared to the disadvantages, right? But then, agreed, there can be an index fund, agreed, I can invest in it, agreed. But then, can I trade in it like I can trade in a stock? So, there are some people जिनको चैन नहीं आती है जब तक कोई वो रोज एक buy order, रोज एक sell order नहीं डालते. They are actually addicted to the market. They believe that at least one order I should place, one buy order, one sell order. आज का दिन सफल हो गया, right? But then such people, they might not. An index fund, we cannot trade like we can trade a stock. You can't be like buy on the exchange, again sell on the exchange, buy, sell. That cannot happen in case of what? In case of an index fund. So it could have been amazing if I could have understood one product, which is a combination of which two financial products, mutual fund and stock. Take few things from mutual fund, take few things from stock. And if one more instrument is there, it will be fun. Means what? I get a variety of investment in one basket, that is a mutual fund, but I should be able to trade it like a stock. Then what is the mixture product called as? Mixture product is nothing but ETF, that is nothing but exchange traded fund. Which fund? Mutual fund. What is the meaning of ETF? The name itself says, na? Exchange traded fund. It is a fund. Fund means what? Mutual fund, which you can trade. Where can you trade? Over the exchange. Which exchange? NSE is the classic example, right? So in simple words, if I were to tell you what is an ETF in the proper, meaning kind of a thing. So ETF is like a mutual fund which you can buy and sell in real time at a price that changes throughout the day. Okay, so like stock price fluctuates throughout the day, ETF price is also going to fluctuate throughout the day. What is one more a good point, that whenever you're talking about any ETF, like ETFs don't charge any exit load. Okay, you might have heard terms like entry load, exit load. ETFs will not charge exit load, so that is also a positive point for that. Okay, now that you know that, okay, we understood that ETF is like a mutual fund. We also understood ETF is like a stock. Why like a stock? Because we can trade over the exchange. Then what could be the different types of ETFs could be our next question. Okay, we understood it's like a stock, but then what could be the different types? I'm going to talk about different types of ETFs now. Okay, first simple type can be an index ETF. Like we have an index mutual fund. Pay attention. Like we have an index mutual fund. We have an index ETF. Correct. I'm checking the comments on another device right now. Who can tell me what will be the main difference between a mutual fund which is following Nifty as an index versus an ETF which is also following Nifty as an index? Can anyone tell me in the comment section that I'm wanting to invest in a mutual fund which is tracking Nifty, and I'm also wanting to invest in an ETF which is also tracking Nifty only. Both are tracking same thing. Both are going to copy the same thing. But then what will be the difference? Absolutely, Adarsh and oh my God, now it has started going very fast. Adarsh, I could read one name. John. Okay, gone. Now going again very fast. Both have answered correctly. ETFs can be traded on the exchange like a stock. I can buy, sell, buy, sell. Of course, I'm going to take certain questions at the end, but someone is asking, could it be similar like Nifty Bees? Absolutely, you're correct. Nifty ETFs, Nifty Bees, same thing. Correct? So I hope you have understood this very clearly. So one type of ETFs could be what? It could be an index ETF. Let's move on to the second type. It could be a gold ETF. So what will that ETF track? That ETF will track gold. So I hope you're understanding this. ETF is having a variety now. ETF is not only going to track an index. ETF can track a commodity as well. Which commodity example? Example is gold. Okay. Why only Nifty? Why only commodity? Can it track a specific sector? Absolutely yes. That will be called as a sector ETF. Some people call it as a sectoral ETF. Okay. So one more time. ETF, different types. It could be an index ETF. It could be a commodity ETF like a gold ETF. It could be a sector specific ETF. It could be bond ETF also. Okay. I'm sure you might have heard. I'll give you all examples at the end. Okay. Bond ETFs. So here, what will be followed? Bonds will be followed by this ETF. Okay, so that is an example of what? Bond ETF. There can also be currency ETFs which follow a specific currency. And the final one, if you want a global exposure, okay, in that case, there are also global index ETFs wherein global indices can be tracked. Okay, so if I were to give you one example, quick examples of each, again, I am repeating. All the examples I'm giving are only and only for example purpose. No, this is 100% not a buy recommend, nothing to do with any sort of recommendation. Okay. So quick examples. Index ETF, it could be ICICI Pru Nifty. It could be UTI Gold ETF for a gold ETF. For sector ETF, it could be Nippon India. It could be ETF PSU Bank Ds, whatever. For bond ETF, it could be Bharat Bond ETF. For global index, it could be something like a Motilal Oswal Nasdaq 100 ETF. Okay, so you can Google out, guys. You'll find loads and loads. Okay, so I'm not saying whether this is good, this is bad. Only for example purpose, I just want to tell you that what a wide variety ETFs has. So I hope you have understood this. ETFs is something which will help me give an exposure not only to stocks, not only to a sector, not only to an index, but also to a commodity, but also to bonds, but also at a global level. These were the different types of ETFs. Okay. Now, the big question, why do I invest in ETFs? I have so many investment options. Why ETFs? Now, for that, there are multiple advantages as well. So let's try and understand what could be the different advantages of investing in ETFs. Number one, simple, absolutely low cost investment avenue. So in fact, I was just trying to, compare few ETFs, index ETFs with index mutual funds, sectoral ETFs with sectoral index funds. And in almost all cases, I can say that ETFs had a lower expense ratio as compared to equity mutual funds or even index funds, as I mentioned in many cases, right? So number one, low cost. That's a primary advantage, I can say, of investing in ETFs. Number one. Number two, liquidity. Like I mentioned, can I buy and sell ETFs like buying and selling stocks? Absolutely yes. So biggest advantage, I believe, is of liquidity. One more thing. Can I say good diversification? Yes. As I mentioned, you can get a nice diversity across sectors, across commodities, across indices. So I think overall diversification perspective is also very good. One more point, I believe that transparency is very good in ETFs. Why? The portfolio, wherever these ETFs are investing, that is disclosed on a daily basis in whatever ETFs I checked while doing the research for this subject, right? So transparency, portfolio getting disclosed, or kya chahiye? Can I say transparency is also very good? Absolutely yes. Okay. So these were few advantages I thought are one of the very good advantages of investing in ETFs. Now, some again, whenever a person believes that yes, I know anything and everything about it, I can directly give a lecture, done. I think your learning journey has stopped. So, I mean, I could have anyways given a lecture on ETFs, on index fund basics, just like that also without preparation. But every single lecture, if this is like the 10th lecture that I'm giving only on ETFs, I try to ensure that have I given at least few data points which I have not given in any of the previous lectures. I think as a teacher, I try my level best to do that. And this is one data point which I found while researching for this very session. I have not discussed this data point in any of my previous ETF videos, nor have I discussed about this in any of my videos on our YouTube channel, right? So I'll just read out the data for you all. It says how this ETF AUM is what? Assets under management. How ETF popularity is increasing. Just to give you a stat on that. Total mutual fund industry. Okay, total mutual fund industry AUM as on 31st January 2017. That was 17,37,087 crores. Okay, so one more time. Total mutual fund industry ka AUM, entire mutual fund industry AUM, I'll skip other small points. It's 17.37 crores. 17.37 lakh crores. Sorry, 17.37 lakh crores. That's a total, what can I say, asset under management for entire mutual fund industry. How was the ETF AUM placed? Same date, 31st January 2017. So 17.37 lakh crores. Entire MF ka AUM versus ETF ka AUM. That was 43,082 crores. Where is 43,000 crores? And where is 17.37 lakh crores? Okay, that was a comparison in what? 2017. So I can say at that time in 2017, out of the total industry's AUM, ETFs was just 2.5%. Total industry ka AUM cut 2.5% was of ETF. Now, latest data that I was able to pull out, 2022, 31st Jan, AUM of entire mutual fund industry, 38.01 lakh crores. I'm repeating, 38.01 lakh crores. So can I say this figure has almost doubled from 17 lakh crore to 38 lakh crores. What? Entire mutual fund ka AUM. Now compare it with ETF ka AUM. You remember what was the ETF AUM figure in 2017? It was 43,000 crores. Correct? 43,000 crores. On 31st Jan 2022, it's 4,08,189 crores. So from 43,000 crores to 4 lakh crore plus AUM in ETFs. So this is like what? 10 times jump in ETF AUM. So if that be so, can I say obviously the percentage of ETF AUM in the total mutual fund industry AUM, that has also increased? Absolutely yes. In Jan 2017, it was just 2.5% of the total industry size, but in 2022, it's 10.7% of the total industry AUM size. So I think this has gone crazy, and that shows how people are actually wanting to explore this as a separate investment opportunity. Again, the reason why I thought of sharing this data with you, because many people are not sure of whatever they are trying to invest in right now. Is it really good? Am I only the one who is investing? Are other people also investing or not? So for that, I just thought of sharing the statistics that how ETFs are becoming more and more popular, more and more people. 10 times ETF AUM has increased in how many years? From 17 to 22. So just in 5 years, 10 times ETF AUM has increased. So I believe that shows the popularity of ETFs as a product, which is surely growing with time, right? Now, if I were to compare, final grand finale, we are coming to the grand finale now. If I were to compare ETFs versus index funds, okay, ETFs versus index funds, then are there any similarities or are there any dissimilarities? Okay, any distinction points between these two? So what is the objective of ETF? Objective of an ETF can be like to replicate. So some can be like revision points for you right now. ETFs is going to replicate what? What is the objective of ETF? ETF can replicate what? And it can replicate an index, it can replicate a commodity, it can replicate a currency. Okay. But index fund is only going to replicate an index. So can I say variety is more in ETFs? Ideally, yes. Okay. Second one, trading. I already discussed. In mutual funds, in index funds, can you trade like any other stock? No. But if I'm talking about ETFs, yes, you can surely trade in any ETF like trading any stock. Are there any charges applicable in case of ETFs and in case of index funds? So yes, if you are trading in ETFs, transaction fees will be applicable. Whatever charges are applicable for buying, selling stocks, similar charges will be applicable while you're trading in ETFs. So transaction fee is what I can call that. What about index fund? No transaction fee and commission is charged in specific case of a direct plan. Okay, so this is about an index fund. What about expense ratio? ETFs expense ratio, as I mentioned, will be comparatively lower as compared to index funds, wherein the expense ratio will be comparatively higher, right? So I hope you have understood what is an ETF, what is an index fund. If you're asking about the variety of investing only in index, investing through a different financial instrument, but getting an exposure to just an index, getting an exposure to commodity, or getting an exposure to a sector, getting an exposure to currency, getting an exposure to foreign indices, all these are available where? Mainly in ETFs. Okay, so variety wise, just to conclude, ETFs have a better variety, but it doesn't mean that index funds are bad. The whole thought process of this entire session was mainly to throw light on ETFs and index funds as different investing options. And I hope you have understood all the key points wherein we started our session with what's a mutual fund, then we talked about active fund, active investing, passive investing, and very important, whatever we discussed right now, be it index fund, be it ETFs, these are classic examples of what? These are classic examples of passive investing. Savvy Verma is asking, can we invest in both? Can we invest in ETFs as well as mutual funds? Absolutely, yes. Why can't you? Can invest in both, right? I'm getting one more question. Oh, I just the name went up. The question was that if I buy the index fund today, okay. So if I were to buy an index fund today, then will I get the same rate? I mean, what rate will I get? Somewhere it was about the rate that was asked. So I'll give you a simple example. If I'm talking about index funds, right? For that, if you're buying an index fund before 3 p.m. today, okay, I'm giving you an example of index fund. If you're buying before 3 p.m. today, you'll be able to get the same day closing price. Okay, units will be allocated to you based on same day closing price. But if you buy the index fund after 3 p.m., then let's say 5 p.m., 6 p.m., whatever. In that case, you will be getting the closing price of the next day. Okay, whatever index has closed at, next day's cutoff price you will get. Okay. Manjunath Reddy is asking, ETFs, can we buy? I will not name the broker right now because it's a session that I'm taking on behalf of NSE. So I don't think I should be calling out any specific broker as well. But can you invest through typical discount brokers and all that? Yes, you can. ETFs, as I mentioned, are like trading in stocks. You can very well trade through the broker portals as well, right? One more, what is that? Junior Bs, so junior Bs again are like ETFs. So you are also right now, you can also invest in ETFs. Bs is just, one more, there is a specific mutual fund house which has named it as Bs. Okay, so that's as good as an ETF. Don't worry on that. Rachana Jakhar is asking, are ETFs good for long term or not? Why not? If you're investing in ETFs, absolutely, they can be good for long term as well. Why not? Okay. Sunil G is asking, is it better to invest in bank ETF than individual bank stocks? Sunil, I guess you got it right. So if you're investing in individual bank stocks, there's no harm. I'm repeating. If you're wanting to invest in a specific bank stock, you can invest. Choice is yours. But assume you were to invest in multiple banks. You were to invest in ICICI, HDFC, SBI, Axis, this, that, loads of banks. Can I say it's going to require a lot of money? Yes. Instead of that, you can just think of investing in bank Bs or any ETF which is focusing on that specific sector, right? So that is absolutely possible. Here you get an exposure with comparatively lower amount. Okay, so I hope you have understood this point as well. Okay, so whatever till now I've been taking questions only from my YouTube channel. Let me just also see if there are other people who are, because this session is being broadcasted live not only on our YouTube channel but also through a Zoom webinar to the NSC through the NSC YouTube channel as well. Let me just see if there are any other questions which are asked there. Okay, crude oil is not related with today's session. Okay. Om Prakash Gupta ji asks, would like to know the pros and cons of investing in index fund. So as I mentioned, in index fund, surely we did discuss about pros and cons, but just to give you quick recap, index fund, low cost structure, then the fund manager making a wrong choice of selecting a wrong stock, selling a wrong stock doesn't happen, because why? The fund manager just has to copy the fund, the index that the mutual fund is tracking. So if it is tracking Nifty, the fund manager just has to copy Nifty. That is it. But then, as I mentioned, one disadvantage that I believe is that no alpha is possible. Can't generate higher returns. Okay. Akhil is asking a very good question. Are ETFs good for beginners? I believe that's a very good question, very valid question. Are ETFs good for beginners? My question is, why not? Absolutely. Why? In fact, because ETF is one of the financial instruments wherein you can start with a very, very, very small, tiny amount. It could be lower than index funds as well. Few index funds se bhi saste mein aa sakta hai. So why not? ETFs can be absolutely good for beginners, and you can surely choose what sort of ETF would you want to get into, because in this session also we talked about 6 different types of ETFs. Which one would you want to go through is your choice, right? Apurva Bhide asks, can index funds be used in order to inculcate financial discipline? Absolutely. And in fact, if you are doing an SIP in index funds, in any index fund, I can say, I think that will surely add a lot of value to your portfolio, because whenever you're doing any SIP, I think the mantra is buy irrespective of the dip or irrespective of the rise. Typically all investors will say buy the dip. What does SIP say? We never know whether it is going to go down and down and down and down. We can't do bottom fishing. We can't sell at the highest point. What is the best way to invest? Invest at every single point in time. Little bit. It's like possibility number 1. Do 10 hours of exercise on one single day. Maddening. Instead of that, do half an hour exercise every day. That will keep you much more fit, right? So that is like an SIP. There are many mutual fund houses. They also offer a weekly SIP or a fortnightly SIP or a monthly SIP. You can choose. But I think a weekly SIP, or be it a fortnight SIP, be it a monthly SIP, I think all these will surely inculcate a very nice financial discipline in you, right? No stock specific questions, please. Harish asks, how can a retail investor invest in ETFs? Oops, how can a retail investor invest in ETFs? You just need to have a demat account and trading account. Once you have and very important, demat account, trading account, and money. Otherwise, how can you invest, right? So for any common man, investing in ETFs is absolutely possible. I think that can be one of the very good ways of at least starting your investment journey, because you can start small, you can start slow, right? Bhargav asks, when is the right time to enter? That's what I was trying to tell actually, right? So if you're doing an SIP, there's no right time. So I guess I'd read it somewhere. Don't try to time the market. There is a lot of time in the market. I'm repeating, don't try to time the market. There's a lot of time in the market. So enjoy the journey. We are not here for a 2020 cricket match. We are here for a test match. So 2020 cricket match are like intraday. Tack, buy, sell, over. Money is not over. Their trades are over for the day. Okay. But if I'm talking about long-term investing, that's like playing a test match. Invest a little bit in chunks, slowly, steadily. Have faith in the financial instrument that you are investing in, right? So that's how a long-term investing can go. Okay. Navroz D asks, which are more popular amongst investors, ETFs or index funds? So I think I answered your question by giving you an AUM size, right? That of course the original AUM size was not only of index funds, it was of the entire mutual fund industry. But I compared that with ETF ka AUM, right? And I also told you that how ETFs are gaining more and more popularity over the last 5 years as well, right? It has gotten a very high exposure. Oh, Nirmit Vahane asks, are there any hidden costs? Are there any hidden costs? Answer is obviously no. Why? SEBI is the policeman who is seeing whether any any such stuff is being carried on, which ideally should not be done. Okay, so SEBI is pretty much vigilant. Either a proactive or a reactive measure will be taken, and if any hidden costs or costs which are not properly disclosed to the investors, if something like that happens, of course SEBI is going to penalize for that. But whatever I know about investing, I've been investing in stock market since 2006 now. I don't think index funds or something like that, they don't have any hidden cost as such, right? Okay. Abhay asks, which ETF is better in today's situation? I was waiting for this question, and my answer is, I'm not going to talk about any specific ETF. Whatever examples I gave in today's session, I've told at least 3-4 times right now. All these were examples. Okay. Okay. Investing in ETF, is it better than investing in direct stocks? Ooh. Okay, we'll take this as the last question. Nilay asks, investing in ETFs, is it better than investing in direct stocks? Nilay, I believe there's no right answer for your question, because there are multiple facets to your question. So a person like me, I can tell you directly, I have more exposure to direct stocks. I do invest in ETFs as well, but exposure in my personal portfolio is more towards stocks. Why? I love that journey of individual stock picking. I love doing analysis. I can read for hours together. I can just download the annual reports, read their balance sheets, read their P&L, read their notes to accounts, read about the management commentary, read about the quarterly data, listen to con calls of the management. I can just go on and on. But if there are some people who believe that I don't have that much time to analyze a specific stock as such, I would want to invest in a theme. Theme could be a sector specific theme. It could be a commodity based theme. It could be investing abroad ka theme. For that, ETFs can be a good choice, right? So as I mentioned, ETFs or stocks. I can't say stocks are bad or I can't say ETFs are bad. Both are good, both are different. You have to choose what suits you. Okay, like someone is also asking me, which mutual fund is good? I think the tagline which has been made, whatever sahi hai, that is correct, sahi hai. But very important, kya ye aapke liye sahi hai? We all are different individuals. Our risk-taking appetite is different. Our investment choices are different. So please ask yourself that, is this the right investment option for me or not? Correct? And based on that, you can take your final decision. I had told you that this is going to be the final question, but I can't resist myself from answering one more question again on the NSE platform. Mr. Arun asks, what is the minimum ETF returns per year? बाकी सब छोड़ो, पैसा कितना मिलेगा बोलो, right? Like I always say, there was this commercial as well, I guess, whenever a person goes to buy a car and the salesman is like, okay, this is the best color, this is all these are the amenities and all, la 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 la. Finally the customer says, wo sab theek hai, mileage kitna dega, average kitna dega, wo batao. So I think that is one very classic question asked Arun. I think this is going to be the question for every single person who is watching this stream right now. I just say that, be it ETFs, be it mutual fund, be it stocks, what can be the expectation that you can set? If you set your expectations right, then you are not going to take wrong decisions, is what I believe. Okay, those who say I'm expecting a 40% return, I'm expecting 60% returns, 25 din mein paisa double, you are setting wrong expectations and you are going to take wrong decisions. Okay, I just believe that if your investment is giving you more than FDs, but not just a percent or two than FDs, I believe that at least twice, 2x of whatever returns I'm getting on FDs, I should be more than happy. How much returns do FDs give right now these days? 5%, 6%? And if I'm able to get 10 to 12%, would I be happy? And answer is obviously yes. Okay. So please understand that whenever you are investing in ETFs or in any index fund, I believe your expectation should be that 10 to 12% I'm happy. Anything over and above that, I'll be much more than happy. But the moment you are, going ahead with maddening expectations, you're going to take wrong decisions and you'll go nowhere in the entire investing journey. If you enjoy this over the longer term, I'm sure you'll be able to enjoy more and more returns as well. So I think that is it. I had planned this for half an hour, but it's more than 45 minutes now. I hope everyone enjoyed this short and sweet discussion on mutual funds, focusing specifically on index funds as well as ETFs. So do let us know in the comment section if you loved this session. 100% education content, and do let us know if you would want to learn more and more on such investment avenues. Well, that's it from my side. Over to you, Team NSC.
Thank you, Rachana, for an insightful presentation. So we would like to thank NSC would like to thank you for giving us a presentation, and I also would like to thank all our listeners for for attending our session. So thank you, Rachana. Thank you, listeners, on behalf of Team NSC.
Thanks a lot. See you, everyone. Bye bye.
Yeah.